There it is, or as President Xi Jinping calls it, the dream of a nation. The Comac C919 is a passenger plane that's domestically made in China, and it's touted as China's answer to aviation giants Airbus and Boeing.
C919, a homemade plane, has started commercial production.
But can Comac break the Boeing-Airbus duopoly, and will it attract buyers outside of China? While Comac declined to be interviewed at the 2024 Singapore Air Show, the presence of the Chinese state-backed firm at the event was enough to steal the limelight from Airbus and Boeing. Executives from the two companies, however, had muted reactions to Comac, with Airbus's Christian Scherer telling CNBC that it wasn't going to rock the boat, while Boeing's Dave Schultz had a similar reaction.
In terms of the C919 activity across the region, it's a similar size airplane that both Boeing and Airbus produce. It will be up to each of the manufacturers to prove the value to the airlines, prove the products.
In addition to the C919, Comac has another plane on the production line, the ARJ21, which is mainly used in the Chinese domestic market, though it's also operated by an Indonesian carrier. Brendan Sobey is an aviation analyst and consultant who's worked in the industry for over 20 years.
The ARJ21 is not certified by the US or the EU, and a lot of the countries in the region, including Singapore and Brunei, are able to get the plane certified in Indonesia and in Malaysia.
Before a newly developed aircraft model can begin commercial operations, it must be validated by aviation authorities, such as the US Federal Aviation Administration or the European Union Aviation Safety Agency, to show that the plane is airworthy or safe to be operated. This is a process known as a type certification. The C919 was type certified by the Civil Aviation Administration of China in late 2022.
It's a very long process.
Adam Calburn is the managing director of Elton Aviation Consultancy, an independent consulting firm focused on the aviation sector.
If you look at other players that have tried to penetrate into the commercial market, say Embraer, for them it was a 5-6 decade process to get to where they are today. Comac is on decade 2 of that same process. They'll likely be able to do it in much shorter time, but there's still years to come before I think we see a large, wide-scale adoption of the C919 outside of China.
The State-owned Commercial Aircraft Corporation of China, or Comac, may have been established in 2008, but China's dreams for a homegrown plane go back further. In as early as the 1970s, it was reported that the country had reverse-engineered a Boeing 707 jetliner, but the Chinese clone, dubbed the Y-10, didn't lift off. In 2002, they began development of the ARJ21, which today can accommodate between 78 and 97 seats. Comac took over the ARJ21 project when the company was created in 2008, while work on a second aircraft, the C919, commenced the same year. The single-aisle C919 was positioned to compete with two popular narrow-body passenger jets, the Airbus A320neo and the Boeing 737 family. 15 years and tens of billions of dollars later, the C919 made its first commercial flight with China Eastern Airlines. Today, the bulk of the C919 orders, which can be outfitted with up to 192 seats, are from domestic carriers and Chinese companies that lease aircraft to airlines. China is one of the world's biggest air passenger markets, alongside the United States and India. By 2042, China is expected to account for 20% of the world's airplane demand. That's more than 8,500 new commercial airplanes in the next 2 decades.
And you look at the size of the China market, one could say, well, maybe they don't need anybody else. But I think it's not that simple.
Almost a year after the C919 made its maiden commercial flight, there have been almost 1,100 orders of the Chinese homegrown jet, mainly from Chinese companies. But is that enough to make Comac an attractive prospect for international carriers outside of China?
GallopAir, a new Brunei-based airline, is the first carrier outside of China to order the C919.
You used to be a pilot.
Yeah.
So you have flown the Airbus and the Boeing.
Yeah, and also passenger and the freighter.
So have you flown a Comac C919 yet?
I haven't. I'm looking forward to have my license, Airbus A, Boeing B, and Comac C.
GallopAir is owned by Chinese businessman Yang Qiang and is backed by Chinese investors. I spoke with its CEO, Cham Chi.
Our shareholder the Tianju investment group in China as a customer and operator of China Comac product. We can get financial support from China Import-Export Bank, also central bank. The aircraft is from China. The RMB, the interest is now is lower than US dollar interest. Around 2017, 2018, we are the first private buyer to order 25 ARJ at that time.
Have you received any ARJ21s?
No, we haven't received. The target is end of this year.
So you bought the ARJ21 first, and then you decided, hey, C919 is launching right now. Why not we continue that relationship?
We changed the order contract to 15 ARJs and 15 C919s. We need to wait 2 or 3 years, then can deliver to us. Yeah, so as our startup aircraft is ARJ.
Here behind me, we have the Comac ARJ21, which has already been operated in airlines outside of China.
Transnusa Airlines, based in Indonesia, was the first international operator of the ARJ21. The Republic of Congo has reportedly placed orders as well.
What about Transnusa Indonesia Airlines?
And another China-backed airline. The airplane has been in service, but it's very limited.
The Comac C919 plane is supposedly a striking symbol of China's plans to advance its technological self-reliance as part of its Made in China strategy. However, not every part of the plane uses homegrown tech.
According to an American think tank, nearly 3/5 of the C919's top suppliers are from the US, while a third are from European companies. Of the C919's 80-odd primary suppliers, only 14 are from China, of which 7 are Chinese foreign joint ventures. GallopAir Aerospace, based in France, provides the landing gear and air management systems. The C919's engines are the same ones powering the Airbus A320neo, supplied by CFM International, which is a joint venture between American GE Aerospace and France's Safran. Inside the cockpit, the flight control systems are made by American conglomerate Honeywell, among others.
It's a Chinese aircraft, but a lot of the parts, including the engines and avionics and other components, are not from China. And then, of course, you look at a Boeing and Airbus aircraft and you say the same thing. So it's not only about their own ramp-up capabilities, it's about the ramp-up capabilities of these same suppliers that are having the same issues with Boeing and Airbus. They're not in a vacuum with their own supply chain. They're in the same supply chain.
Other airlines in countries such as Nigeria, Thailand, and Germany had expressed interest in the C919 planes, but these carriers have either folded or have yet to make a decision. How difficult is it to get certification to fly outside of China?
It's obviously had its first phase within the sort of Chinese ecosystem and domestic flying only, and likely move out to a market where there's politically favorable environment to collaborate with China and see the aircraft enter into service. Obviously, Indonesia, Brunei will go through that validation process.
Anytime there's a new aircraft program, it takes time to build up. So you wouldn't expect anything like Boeing and Airbus numbers anytime soon.
Another hurdle that Comac will face is MRO, or maintenance, repair, and overhaul support. This refers to the after-sales support available for aircraft to ensure safety standards are met.
The big challenge for Comac across the board is really the uncertainty, just the fact that those things remain unknown, the entry into service, how much it costs to operate the aircraft on a per hour, per trip basis, the level of spare support needed, putting all those pieces in place and helping operators remove that uncertainty, particularly in an airline industry with very low margins.
In fact, GallopAir's Cham told me that Comac would consider creating MRO support in Brunei if the airline increased its order to 30 aircraft, which it did.
Maybe first and second aircraft, we still need to fly to Shanghai to MRO. After the 3 to 5 aircraft delivered, then we can start the MRO in Brunei.
And support is a major issue and challenge in selling the airplane. The further from China you get, the more complicated it gets. In Southeast Asia, you have proximity to China. It makes it a little bit easier. You have a lot of companies in Southeast Asia who would be willing to add this capability at, with the right deal. It's not only about just MRO capability, it's about having the parts available, having a reliable operation.
The ability for Comac to draw customers away from Airbus and Boeing will also depend on the delivery timelines and the price of its planes. The C919 was priced at, if I'm not wrong, 98 million.
The list prices don't mean very much. There's always discounts. Comac is obviously the prices very aggressively. If you look at the ARJ21, it's no secret the plane is basically given away. The 919, I mean, nobody knows the price yet.
I think the big uncertainty that remains is what the future production rate of the C919 will be. So it's a big question, having only delivered 4 aircraft over the last several years, how do they get to their target of 150 aircraft per year, which is the most recently publicly stated target for the C919. That's how industry analysts will look at it. We'll look at production rates and want to understand at what rate are they going to start to meaningfully chip away at the market share of Boeing and Airbus. And our models predict that that is still quite some time out.
Despite the external challenges, Comac can still count on strong government support and a sizable domestic market.
I mean, China itself dominates one of the largest commercial markets. Will Comac be able to satisfy this demand, or will it still need other international airlines to sort of buy in?
It's not like the 919 will be the exclusive airplane for the domestic narrow-body operators in China. The aspiration, at least, is to have international sales.
Certainly, we see now entering into people's consideration set. They're starting to say, particularly in Asia, smaller airlines saying, why don't we include Comac in our evaluation?
I think airlines want that third option after Airbus and Boeing, particularly, given Boeing issues recently. But it's still early to say whether it's a real serious or viable competitor in the long run.